Hello, today is the final day of May, and let's discuss what's happening here and maybe make some projections on what's about to happen next and how to position yourself in this market. So, my personal takeaways is to a large extent, everybody and the economy of the states at large is still trying to figure out what's about to happen because this whole situation with tariffs, so my understanding of it is at first everybody expected it to be maybe a negotiation tactic, um, verbal interventions that could make representatives of other countries uh, be more agreeable when it comes to trade negotiations. Then all of a sudden, it all became a reality, and everybody got scared, so the market sold off. Now we saw maybe a bit of change in rhetorics and in factual actions. So it wasn't it started to turn out not as bad as it looked 2 months ago, something like that. And then all of a sudden, there was a change of a theme during this week because negotiations were more or less on track, especially even with the European Union, because yes, of course, the week started with the threats of additional tariffs, but they were postponed, so the markets gapped up. But what is tricky now is that there is actually uh, an infighting situation between the current administration of the states and the court system. And the courts basically framed this whole tariff initiative as illegal. So, and Donald Trump's administration in turn responded with an affirmative stance. They want to go further and maybe involve other clauses in the legal system of the states to finally roll out those tariffs. And with that, we also saw a bit of a skepticism from Donald Trump in regards to how Chinese approach these negotiations. And we also, on top of that, we also got doubling of steel tariffs on Friday after the markets were already closed. When the markets were already closed, and it's a mixed bag. But the main takeaway, if you will sort of digest it all and transform it into something understandable and something that makes sense, there are basically two takeaways. We don't we have more actors on the scene and more moving parts. Not only we have Donald Trump and his advisors who develop these tariffs and they implement or maybe they do not implement them, but they are certainly considering this. They are quite serious. And with them, there are other dancers on this scene, and it's the judicial system, and we don't really know what's about to happen with that whole project now. And as I mentioned before, certain signs of deterioration of negotiations with China, and China is crucial. Obviously, European Union is very important, but China is more important for the states than European Union. And it's not only it's a potential partner or a rival in trade. It's like the main competitor of the states overall. So that's why we're paying attention to China. in the first place. And the new theme, which with which we could frame all that's happening now, is uncertainty, or maybe you could call it chaos. I don't know. Chaos maybe is a bit of an exaggeration, but uncertainty, very pronounced uncertainty, is a fact. And as I mentioned in a short video yesterday, uncertainty actually, I think, is the worst thing to happen to business. And money doesn't like uncertainty at all. There could be divergent situations when there is uncertainty in the news, in social media, maybe among even professionals who speak out, but the markets are trending. That means that actually at the level of the desks, when where the money are being deployed, there is certainty and there is a readiness to commit funds. What we're seeing now is actually quite different because there are lots of divergences inside this market, and that's what makes it difficult and frustrating to lots of folks because you'll see these headlines as they are now that the markets are near their highs, and this month was actually one of the best months in the recent years in terms of gains. But inside of many portfolios, there is a lack of progress. And you can address it with different approaches, but it's a fact. And lots of people are blowing up now. I'm pretty sure about that. Obviously, it's not as bad as when it is when the markets are just going straight down, but it's quite bad now too because basically what we saw price-wise in the indexes, they just repaired themselves, and they have repaired themselves based on two premises. The first one is that the tariff situation will not be as severe as maybe it was stated in the official rhetoric of the current administration. And the second one, and quite important too, and it should be mentioned that the American economy is quite resilient. Uh, for example, during this week, we saw durable orders, yes, still contracting, but better than expected. Personal income is still growing, and uh, PMI may be a bit and concerning, but it's a forward-looking indicator, and we'll talk about that in a moment too. But overall, the economy is strong, and imagine how could it look like if maybe some things were different. But the fact that the prices are near the highs now only means that the situation sort of took one or two steps back to the moment which preceded the original correction, which unraveled in February, maybe, or something like that. So we have the economy which is strong, but you see these forward-looking signs of deterioration and of cautiousness on behalf of businesses and, most importantly, the consumer. And you also see uh, the administration of the states, which is vocal and is mm, tough, but maybe moderate and considerate uh, when it comes to actual application stuff. So that was basically the situation on Thursday. And was it Thursday when the court? No, that was the situation before the courts sort of rolled back this, tried to roll back uh, this whole tariff thing. So Money, as I said before, doesn't like uncertainty, and so do the markets. And if you couple that with the current technical situation, actually, I'm quite moderate with my expectations, to say diplomatically, for June, because what we will see new rounds of this fighting between the current administration and court system, and we will also see maybe. Well, I'm not in the guessing business, but we'll see something regarding the negotiations with the European Union and China. So that could maybe help or maybe not. But uh, I think that in the current moment, it is more difficult to actually negotiate, sit at the table, like when European bureaucrats and American trade negotiators uh, conduct talks. And say it's the same with China. It's more difficult because these days nobody actually knows uh, what's about to happen. Do we really have to negotiate these tariffs? Will they even be implemented at all? So that's another layer of complexity in that situation. So that's why it's going to be uncertain. And when you take Magnificent Seven, for example, and maybe gold as an indicator, you will see that gold still looks good. And I think it's sort of it had rebuilt itself as the primary uh, safe haven of this investment world now, and it's still strong. Nothing is really changing. Yes, the fact that the judicial system of the states is opposing the tariff initiative had suppressed European currencies. I mean, the euro and the pound in this case a bit, but they are still strong. And that, in my opinion, means that if the states will be reverted to the state, I'm sorry for display of words, in which it was before the current administration, it will restore status quo to a large extent. And that means that the states will maintain their structural problems, which is debt and inefficiency of state and corporate bureaucracy, but it will become what it was before this whole transformation began. Uh, to a large extent, not totally, but to a large extent. And that will automatically make European Union less attractive because obviously it's a bit of a startup if you can allow for such choice of words in regards to European Union. I mean, their whole initiative of rebuilding themselves, assuming financial and technological sovereignty back. This is a startup in the corporation of the European Union. But if you have a startup which is quite difficult to implement when you have a big structure which is old and rigid, and you have at the same time something that is already working, maybe having some trouble inside, deep inside, but not so obvious on the surface, which is the current economy of the states. What will you choose to deploy your money? Which one of them you will choose to deploy your money in the intermediate term? The states, of course. So it will suppress European growth initiatives and make American markets, which have which were basically consuming all the capital in the world during the previous years, it will make these markets uh, attractive again. But nevertheless, both the euro and the pound have finished this week strong, not breaking out, but they are near the levels from which they were breaking out at the beginning of the week. So it's for them, it's still uncertainty, but they are sure that something will change, and it's not going to be very pleasant for the states, because you could also look at what's happening in the space of the coin now, namely the Bitcoin and other cryptocurrencies. I pay attention to them because for me, not only they are separate asset classes and vehicles to express certain biases, but they are also the ones which are the most sensitive to the rate policy of the Federal Reserve. And we also had Federal Reserve minutes on Tuesday during this week. And Jerome Powell was quite cautious, and it's understandable. And he was cautious even before the deterioration of or maybe improvement. That depends on your views, obviously, of the trade situation with the court striking tariffs down, at least for a moment. And initially, I proposed shorting BTC as an expression to to likely stalling of trade negotiations with the European Union, because the deadline was nearing, and I expected a spike in volatility in regards to that. So I shorted a bit of it, and it is working so far, but due to other reasons. And cryptocurrencies became weaker with the court decision, and they became even weaker when Trump administration, or was it Donald Trump himself, mentioned that the China isn't moving well with the negotiations in his assessment of the situation, and it got kicked once again after hours on Friday when Donald Trump announced a doubling of the steel tariffs, and that reflects, in my opinion, that reflects more difficulties for the Federal Reserve in regards to tuning their policy to these conditions. Well, because the conditions are mostly unknown for now. Now it's mandated that we can be sure that at least for a month or a few weeks from now they will be as uncertain as they are now, or maybe even worse. So that's why we will not likely to have any rate cuts during this period, or maybe even softer rhetoric from Jerome Powell. So that's why coins are correcting. The only thing I was wrong about here is that there are actually way better ways to express such a trade, because Bitcoin, due to its institutional adoption and lots of institutional buyers supporting it, is way stronger than the altcoin universe, which was demolished quite a bit during Thursday and Friday, especially. So, in terms of shorting, I think it's safe. It's safe to assume that when something bad happens to the decentralized finance sector, and it's time to, or it is about to happen, it's better to go and look for shorts in the altcoin domain. And Bitcoin could be a better expression for uh, leveraged long. Well, at least in my approach to this market. Briefly about approaches. So what I'm taking mm, away from this whole situation is that actually you gotta tune tune yourself, tune your strategies. My personal quest, is I developed my strategy in a way that I could utilize it in different market conditions. And I was thinking about using options more. But why? Because it's a good way to suppress volatility, news induced volatility in your portfolio. But the problem is up with options is that they lock you in, and it's difficult to trade out. So what I'm seeing now, and I will be working on that in terms of my methodology in the coming week, is maybe reconsidering spot a bit more. And I have some successes from leverage trading in crypto from the previous year. And nowadays, I'm thinking about installing that part into my stock portfolio to make it more adaptive. And there are some things there that are proprietary, but the more I see what's happening and the more I see these wild swings in different stocks, and the more I see how narratives change, and the more I understand that the changing narratives from week to week, from month to month, are here to stay, and it is highly unlikely that we will see period of predictability, of geopolitical predictability, and trade situation predictability. This is very unlikely in the coming years and maybe even decades, if my assessment of the high level historical situation is right. Obviously, everything could happen, but so far, for me, the main predictor of a stable system is a visionary, constructively aligned political elite. And what we see in the majority of developed countries, uh, this is quite rare. And there are still visionary politicians, but they see conflict as an expression of achieving, as an expression of, as a vehicle to get to the destination, which is their vision. And this is usually not very good for the market. So, and builders and visionaries with other means of realizing their political visions are somewhere else in other regions, which were considered international backwaters not so long ago, actually. And if you want to trade developed markets, you got to be ready to trade through lots of volatility, news-induced volatility, and micro driven volatility in the coming years. So that is the main takeaway from this week. I uh, I assume. And you can just leave these markets. You can just leave the markets of the developed countries because they have deepest liquidity and new potential growth regions. They just don't have anything to offer at the moment. They don't have stock exchanges. Um so that's the reality, and you gotta move as it changes, and you gotta be adaptive. So I think that's it for today. See you.